Hello, this is Manish Patel from the EII Capital Group. Today is March 20th, 2011. So a weekly Ichimoku analysis for the global markets where we cover everything from the US to Asia to Europe and so forth. Okay? We got a lot to cover. These markets are exciting. Disclaimer, this is for educational use only. All charts are in Thinkorswim, TradeStation, or freestockcharts.com. Okay, here are my contact details. You can follow us on Ichimoku Trading on Twitter. Also, there you could access our website for access to any of our free videos that are available out there. Okay, so let's go straight to the global markets because that's been exciting for people. So let's go straight to Germany, where it's been interesting with what's going on. So let me sit there and go into a tab format. And let's go look at the weekly, and you could see the weekly. Let's go look for the weekly. If you look at the German market, it's finally has entered a major pullback now, as you could see from the weekly. So we've been waiting for this pullback for a while. So we're glad to kind of see it because markets were way overextended. It did get our target level here of which was roughly about right here of 72.70 and poked its head out above it, but we did get to our target level there, and then markets kind of get it overextended. But now we've got a correction on the way. Now the markets can healthily keep on going up as soon as this pullback is over. Okay, we'll analyze the U.S. markets, and you can see if the pullback is over or not and when. Okay, let's go to London. London, of course, has entered a major pullback. You could see that it didn't have that much drastic movements based on the charts, but remember, German market went up a lot faster, nice trend up percentage-wise than the London market, so it's a kind of equivalent, but both that's entering a pullback phase too. Let's go to Paris. If you look at Paris market, it did a major pullback, more of a pullback than any other markets because it got to the top of the cloud, but that's of course because it never really sat there and moved up higher. But this kind of poked its head out of the breakout of the resistance and then went slamming down. So it's very weak as far as markets are concerned. If you're doing any pairs trading, you can't sit there and keep on going and going along the German market and shorting the Paris market. Okay. Let's look at there, and then let's go look at some of these ETFs. Let's go look at Spain. Okay, if you look at Spain, it's in the cloud right now, so it's consolidating. There's nothing really to talk about. Israel has entered its major pullback too. So it's just like all the other global markets, it's there. This is almost like the Paris market, not quite as worse as Paris, but the charts, it didn't move up that much compared to German market and London market, but Germany of course is always leading there. If you look at South Africa had a little move down, but not much, so still very strong. You can see it's got a little double bottom here, which may hold here as far as the ETF is concerned. So South Africa does look very strong right now. Look at Russia. Remember we talked about on Twitter, Russia being a huge play for this month. Seasonally, Russia is the country that pretty much has the biggest percentage move this month, and you could see that all the other countries went down. Russia really didn't take that much of a hit, you could see, and it's holding its ground. So Russia looks very strong right now as far as markets are concerned. Okay, so then let's go over to Asia. Let's go start off with China. Let's go look at the Shanghai. If you look at the Shanghai here, as far as the weekly is concerned, you could see that it's bullish sentiment, but there's still conflict with the other Ichimoku indicators. But this thing really needs to break the 3,000 level in order for it to start a bullish trend up. If it breaks the 3,000 level, it's going to start a trend up, but we've got it predicting for probably about another 2 or 3 months. If it doesn't sit there and break it, this thing's going to have to consolidate for 2 or 3 months before it starts moving up. But I really think that this thing's going to start moving up, especially with everything that's happened with Japan and things now starting to move over to China as far as fundamentals are concerned. Let's go look at Hong Kong index. If you look at Hong Kong went for a pullback just like all the global markets are concerned. It's still very strong, but it still went for a pullback right now. Let's go Nikkei. Nikkei, as you know, was starting to lead, and we kept on talking about this potential being the biggest breakthrough in the markets when we were talking about that one right around here back in November. Unfortunately, due to the event now, everything has got destroyed. The price is now below the clouds, so the sentiment has completely went from bullish to bearish overnight. That's one reason why you have stops in place. So, if you had your stops in place, then basically you were able to keep onto your profits if you got in back in November. If not, you lost them all plus more. Okay. Let's go over, we did Tokyo. Let's do the Indian market. Indian market here, you could see that this thing is still in the cloud right now, so it's consolidating, but you can see our momentum indicators very strong to the bearish side, so be very careful as far as the Indian markets are concerned right now, but we'll wait and see what happens there. And then let's go to this Sydney market. It's pulled back all the way to the bottom of the cloud here and then pulled back up. So that's interesting. Let's see how it went all the way down and then came back and closed higher. That's kind of showing you that it has some strength there to the bullish side. We'll have to see if this was a short run to get all the shorts, longs stopped out, but we'll have to see. This week will be critical for as far as the Australian market is concerned to see which way it's going to go. But we'll see what happens there. Next, let's go over to US side. Let's go look at Mexico. It's pulled back, but notice one thing: it is yet to break this the cadence in on the weekly time frame. So that's very strong right there. So it's entering a pullback, but Mexico still looks very, very strong going forward. Chile it's entered a major pullback, just like all the other markets are concerned. Okay, so let's go straight to the US market. Remember how we left off the U.S. markets? The ES was leading everything going forward. Then it was the Dow, and then the NASDAQ, and then the Russell. So let's go look at the ES now. And if you look at the ES now, you could see that it didn't get quite to the cadence on the weekly at all. Missed it for by probably about 12 points or so, but it got very close to it there. And you could see they got to the bottom of the cloud here. Friday with a huge up movement, we went up and then we came in and closed down lower. Now, a lot of people are thinking that this market's going to go higher now due to things kind of stabilizing in Japan. Don't count on that yet, okay? Even though right now we're showing that we're in a pullback phase as far as the weekly is concerned, and we're in the cloud on the daily. Okay, so you have to be very, very careful right now. This could be a minor pullback up, and then it could sit there and start going lower. But the charts are still bearish, and the momentum indicator is still very strong bearish unless you get a little more upward movement. The 1292 area has to hold as far as the ES is concerned. Okay, so be very, very careful going any commitment to any side right now, especially for this week. To see, you need to see what price action holds for you this week before you make any commitments. The Dow is the same way. The Dow did get to the cadence in on the weekly time frame and then kind of bounced off that. It doesn't mean that this it's a pullback is over at all. There's no signs as of yet, just like the ES, of the pullback being over. This thing's got to hold the 11,915 level. If it breaks that, then it's going to go higher and resume its trend. But the 11,915 area is very, very critical. But the momentum indicator and everything is very, very bearish as far as the Dow is concerned. Let's look at the NASDAQ NQ. If you look at the NASDAQ, didn't quite get to the cadence on the weekly, but look at the daily. Daily is more weak than all the others because it's below the cloud. So if you're going to do pairs trading, I definitely probably would look at shorting the Dow and maybe going long either the ES. Shorting the NASDAQ and then either going along the ES or the Dow, which seems to be working right now very, very well. Last year was reverse, where basically you were going along the NASDAQ and shorting the ES. This year it's reverse, so it's interesting how one year kind of flipped the other year. But Dow is basically, NASDAQ's in the same boat with all the other markets. Now look at the Russell. Russell is holding its ground, so small caps are holding their ground. Look at this. Didn't even get close to the Cajun Center at all. This been holding its ground there. Didn't even go to the bottom of the cloud. In fact, it's closed above the cloud. Doesn't mean this is bullish, okay? But this is strong right now. So in theory, you could sit there and go long the Russell and then short the NASDAQ right now and see how that play works. but be very careful. Russell is very volatile and can change any time, so we like to keep with either one of the three, NASDAQ, Russells, or Dow, when doing pairs trading. So, but this is very, very small, so right now small caps are kind of still very strong. So if you're day trading, I'll definitely look at small caps opportunities out there and see if you can find them, because they're holding their ground as far as bullish is concerned. And that's it for this week. I hope you enjoyed it. I'll see you next week.